Hey, good afternoon. Today is May 19th, 2022. We're looking at 2000 tick chart for the E-mini S&P 500 futures market. 21 EMA here in blue, 9 EMA here in cyan, and 200 EMA here in magenta. We have MACD indicator here at the bottom. Focus on using technical analysis, price action, overall market context in order to place our trades. Take a second real quick, like the video, subscribe, turn on post notifications so you know exactly when I post these videos. And let's get right into it for today. So unfortunately, I made a mistake. I was 4-1 today. The one loss that I had was a trade that I shouldn't have taken. I went against my rules, I broke the discipline, and it bit me. So unfortunately, a little bit frustrated about that, but we're going to go ahead and talk about it today. Every single catching loss strategy trade that I took was successful. It was when I deviated from the rules that I lost my trade. We'll get into that later in the video. But as we do on this channel, we mark a level of resistance here at overnight highs, level of support down here at overnight lows. The market opens. Now, right off the bat, we had prices that moved down to the lows, pushed back up above EMA, briefly stopped below this 21 EMA, but then continued up. Once we got a swing here from 21 EMA, that's where you're drawing this bigger trend that's at play. So the bias is definitely up. As the market opened, notice how MACD had a brief interaction with bearish territory, but then crossed over to bullish territory. We're going to go ahead and restart this count right here at the bottom. Prices come up and down for a first entry long. Prices come down. If there's a trigger below this bar right here, which there is, second entry short triggers, I'm putting my stop limit order one tick above where everyone has their stops trying to go short. And as prices come back up, my order is filled. I'm in this trade. My stop loss is going one tick below this signal bar right here, and prices never come close to it. They continue up. I'm in and out for the scalp. So that was a win. Now, continuing on here, we have this trend that's in play as prices are holding neatly. 21 EMA, 9 EMA. Everything's trending very nicely. Then prices continue to fall. They're going to test this support level of this channel. Prices don't hold. You can see, you can look down at the MACD here. We had a crossover here of the MACD. So now we're entering bearish territory. We have this short-term trend that's working down. First entry long happens. Prices pull back. Second entry long triggers above this great bullish bar here. So some people are going to get trapped trying to go long, but prices reverse, close below EMA. You have all of this bearish pressure. I didn't mark it. I didn't see it in the moment, but if you manage to read it correctly, there's a lower high opportunity as prices try pushing up again. But when they don't, you could take a trade right there. Nice scalp. Potential runner. What I was more noticing was 9 EMA was crossing over 21 EMA. We're trending downwards. Prices are pushing through this 200 EMA here. All of this bearish momentum here on the MACD. We have a new swing up here. Prices come down for a first entry long, but prices continue to hold below EMA. Prices continue down. Second entry long if there's a trigger above this bar here. And there is as prices come up. I had my entry order one tick below this signal bar here. I was in this trade. My stop loss is going one tick above this signal bar right here. And prices stalled for just a second before they continued down and I was out for a scalp. That was my second win for the day. Now, if you didn't start the count from here, but you started the count initially when the 9 EMA crosses over, you could find here that you restart the count here, prices come down. That was a first entry long. Then prices continue down. Second entry long as people are trying to go long above this bar. You could treat this as a failure and catch stops. Some people's stops are going to go one tick below this signal bar right here. Other people might put their stops one tick below here. I think this going short below this bar might be a little bit more risky just because you'd have to put your stop all the way up here. But as the next bar prints, you'd potentially be in this trade. Prices continue to fall and you would have been in and out for the scalp fairly quickly. So depending on where you're starting that count, you could enter on that bar and you'd be in for a scalp potential runner. Clearly to see we are in a very strong downtrend. Nice separation between 9 EMA and 21 EMA. Prices pushing through this 200 EMA as well. And we're anticipating for prices to reach back to these overnight lows. I did have this horizontal line in place because as I was wondering where prices were going to go, I just looked to the left and see a little bit of support in this area. And that's basically what happened. We had possibly a slight break of this downtrend, move to a new low. Essentially, support was found at this horizontal line. And again, that's just from looking left, seeing where prices are normally bouncing off of, reacting off of. There's a second entry long that triggers, but it's below EMA. Not looking to go long. It's still a little bit early. We do have a MACD crossover here. So as support is found, we are potentially looking to go long. There's no way to catch stops based on the count. We do have this new swing here, price come down first entry long, second entry long, but bars are stacked, EMA somewhat flat. A little bit risky for me. Now bars started to kind of channel down here and initially, I have something like this, but I don't know how convincing this channel is. I started to treat it more like a range. Once I started to see these overlapping bars, EMA was flattening out. And so I pretty quickly got rid of that channel and I was looking for a range. And that's essentially what I had, a little bit bigger, a little bit wider. EMA's flat, holding in the middle of this range here. I didn't want to take any trades in here. It looked fairly nasty. Now, as prices started to push up and out of this trading range that we had here, I'm going to color it in so people can see it better. So this was kind of the trading range I had. I started to see prices push up and out of this trading range. And as prices came down, an old way of thinking started to kick in. We were making higher highs and higher lows. I saw first entry long, short-term trend that was working down with the break, looking for a potential new low. We had a double bottom here, breakout, pullback, second entry long, nice little signal bar coming off 21 EMA. That is what I was focused on at the time, but there's no trade here. Look at how the MACD is losing momentum as it reaches this new high. MACD is losing momentum. You're getting that crossover. You should not be entering long here. This was the mistake I made. I entered the second entry long, trying to enter a breakout pullback, looking for prices to continue up. I immediately got trapped. Prices reversed on me. My stop loss went one tick below this micro double bottom here, and that was a trade that wiped out the wins that I had earlier in the day. So I was pretty upset about it. I really should not have been in this trade, but it's a learning lesson. You got to stay disciplined. This MACD was clearly telling me there was a crossover. We were entering bearish momentum. That's the whole point of having indicators like this, to filter out those nasty trades. I saw second entry long. It failed. What I should have realized was, because there was a crossover here, I knew people were going to get trapped here. I could have entered a trade in order to catch stops. I would have been in and out of this trade, potential runner as well. And I know where prices are going, back into this trading range that we have in play here. That's how I should have played it. So I was really upset about that. But I'm not perfect. I'm not a robot. I'm a human. I made a mistake. It is what it is. I'm just going to continue to learn and grow from it. But for full transparency purposes, I lost there. So prices came down, a little bit of an overshoot to test the bottom side of this range. Prices came back up. EMA is somewhat flat in the middle of this range, so I still had this range at play. We had a short-term trend up with the break, move to new high. And then once this happened, prices reversed down strongly below EMA, cutting through the 200 EMA as well. Notice the MACD is crossing over from bullish momentum down to bearish momentum. This trade is fairly aggressive. You could potentially take a lower high. You had this uptrend that played out. Prices pushed strongly below EMA, tested one more time. You could potentially take a trade there. Once you got this really big bearish bar though that shot straight through this trading range, I thought, okay, prices could continue lower for sure. So I started the count from up here. Prices came down. First entry long. Notice how 9 EMA crosses over 21 EMA. Everything is pushing through 200 EMA. As prices come down, if there's a trigger above this signal bar, second entry long, I'm going to look at catching stops to go short. Next bar prints. People are sucked into this trade. I had my entry one tick below the signal bar here. Prices came down. I was in this trade, had to wait just a second. Prices ticked down, filled my price target before reversing. Now, what I liked about it was the separation between the 9 and 21 EMA. We never had a close above the 9 EMA, so I held my order in place. But as I was holding my order here, I'm not in this trade yet. I still have time to get out. I noticed a little bit of the momentum dying on the MACD, but then it started to pick up a little bit, and that's when I held my order there and I was in that trade. So fortunately, I got out of that trade before prices reversed. It would have otherwise stopped me out, but that was my third win for the day. Prices immediately made their way down here to the support level. That's when I started to expand this trading range that I had in play, and it was fairly unclear. I wasn't sure exactly where prices were going. There was no way for me to catch stops. I didn't see any second entry longs or shorts that I wanted to take. You see prices continue to oscillate back and forth. I'm looking for movement. I'm looking for momentum. I start to see higher lows form. I start to see this bullish imbalance. And as prices started to push up, I saw this as a new low. Prices came up. First entry short, prices came up. If there's a trigger below this bar, it's a second entry short. It does trigger and immediately came back up. I didn't take this only because we were going into the highs of this range and I was a little bit hesitant. So prices continue to move up. You would have been in and out for the scalp. You caught everyone's stops trying to go short here. I marked this one as blue. This one's probably a little bit more aggressive. And to be honest, this would have been a little bit aggressive too. So what I saw here is prices continued up. I started my count off the 9 EMA now. That's what made this aggressive. I wasn't starting the count off 21 EMA. I started the count here. Prices came up and down for a first entry short. Then prices came up down for a second entry short is there's a trigger below this bar. We're in a nice strong uptrend. I had this channel in play moving up. MACD is showing nice bullish momentum. We're looking to touch these overnight highs. So I had my entry order one tick above this signal bar. Prices came up, filled my order, and I was out for a scalp. Unfortunately, runner got stopped out. But where do we anticipate prices go? Up to the top of these overnight highs. So exactly what we think price action is going to do. We have a break, attempted a new high before prices reverse. Prices came back down, trying to test the 21 EMA. They come back up to test the overnight highs one more time and then push down. So now as prices are pushing down, if we reset the count, we have a new high here. Prices come down for a first entry long. And as prices come down, if we get a trigger above this bar here, we have a second entry long that could potentially fail, and we'd be looking to catch stops. Now what ends up happening, next bar prints, prices tick up once and immediately reverse. Your stop limit order is going to go one tick below this entry bar. So you'd be entering at 1750. Prices would have came down. Your stop loss is going one tick above this signal bar, but prices continue down and you would have been out at 1550 if you're going for 2 points. So that's a potential one you could have taken too. You can see MACD is showing a lot of bearish momentum, separation between 9 and 21 EMA. I was done trading at this time over here. I had my fourth and final trade right here, but I thought I'd at least mention this one because it's right after. Anyway, prices continue. It's 11:30. Wasn't looking to take any more trades. Ultimately, really bummed out about that loss that I had. I really should not have taken this trade. It went against my rules. I got burned for it. You know, it's a learning lesson, but stuff like that happens. Tomorrow's a new trading day. I plan on trading tomorrow, but I'm not going to be able to post a video tomorrow only because I have to work. And this weekend, I'm going to be very busy. So that's going to be it for this week. I'll see you guys on Monday. I appreciate all the support you guys have been showing these videos, all the comments, the messages, the likes. You guys are awesome. I really appreciate you guys. Like, subscribe, share. I'll see you guys next week.